Chuck, good day to have you on. I mean, there is a ton going on. First off, though, on a macro markets perspective, 3-week losing streak, big stocks starting to underperform as we just showed our audience, futures down 500. It appears that people are getting a lot more nervous. What's your advice and recommendations for them right now?
Well, as I said in a broadcast earlier this month, September is the worst month for the market historically, and it gets worse as time goes on. And so we're down now almost 9% from the highs, and September has lived up to it. Of course, we had this big market run up to it, so it was set up for that. And now we have the news about the coronavirus still raging here in the U.S. and in Britain and Brazil and other places. And now with Justice Ginsburg's unfortunate death, Washington is going to be in a turmoil probably all the way through Election Day. So we may not get the stimulus that the economy needs.
Yeah, and that's something, you look at the passing of the Titan of the court, RBG, and you think about the political fight to come, and then you wonder, well, there's so much else to do. Is this going to sort of set Congress off its track? If we don't get a stimulus program, Chuck, what happens?
Oh, we have to have the stimulus given that the economic activity is still quite low. Our unemployment rates are high. And now people are unemployed, are not getting what they used to get. So the stimulus is paramount, and we're concerned that it's not coming. And so this decline in stock market very well could continue.
I know you spent the majority of your career as a fixed income guy, Chuck. I mean, bonds have been, listen, they've been boring because they haven't been returning anything. Nobody really wants to own them, which is one reason stocks have done so well. Should we be revisiting the way we look at boring old bonds?
Yes, we think so. We think the most important thing is to minimize downside risk. If you minimize downside risk, then people will stay invested in the market. And although bonds have no yield now, they still are a great diversifier for the equity market. And because of that, we think that investors still have to have bonds as a diversifier. We even like long treasury bonds, an ETF like the iShares 20 plus year treasury, TLT, in order to have the diversification that is necessary. Again, you can't think about the low yield. You just have to think about the price diversification that bonds have and the protection that they have. And you can see it in today's market, bond prices continue to rise as stocks decline.